Welcome. My name is Ziv Kenan. I'm the CEO and founder of Symmetria. Symmetria is a digital securities exchange launching out of Israel. Symmetria is also part of the Onera network. With me today are wonderful panelists, leaders of the digital securities space. I let each of the panelists introduce themselves, and also I've asked each of the panelists to discuss one of the projects that they're leading right now. So we'll start with you, Milan. Hi, Milan. How are you?
Thank you, Ziv. My name is Marleen Everts. I'm the CEO and founder of An Exchange, a fully regulated exchange within the Netherlands, within Amsterdam. We are a regulated market and an MTF, but we trade digital assets. Two of the large projects we are currently running is we are doing a combined IPO of 30 deep tech ventures, which we are offering as one virtual basket to the market. These deep tech ventures are set up by one of our biggest universities, our Eindhoven University. So it's a big, exciting project. In total, about 13 million needs to be raised. Innovation takes place both from a technological place, but also from a financial aspect takes place. The regulators are involved. So yeah, we're very excited. And next to that, we're running a special purpose acquisition company who is currently raising capital to acquire HEMA, which is one of our most important retail chains within the Netherlands. So it's there's a lot going on. Very small exciting. Investors, big investors. So we're not complaining.
That's very exciting. That's also very advanced. So kudos to you. And off to Kiri. Kiri, do you like to introduce yourself?
Yeah, hi, I'm Kiris. I'm the COO of London Derivatives Exchange, and we are building digital asset exchanges. The projects we're focusing on at the moment, we are working on a method for distribution of returns. We think that that's one of the key aspects of digital assets that hasn't been unfolded quite properly yet. So that's what we're working on.
Thank you. Exciting. Graham, be happy if you could tell us about Archax, and congratulations for receiving your FCA license lately.
Thanks, Ziv. Thanks for having me. So hi, everyone. So I'm Graham, co-founder, CEO of Archax. We're a digital securities exchange in London. We received our FCA permissions to operate an MTF exchange and MTF exchange broker and custodian earlier in September, and hope to go live in around March of next year. So we're spending much of our time at the moment on standing up the venue, trying to get participants and issuers and hopefully bringing some liquidity into the space, and also working on how we can correctly offer security tokens in the space. So what does it take to market a security token in the same way that someone would market traditional securities?
Sounds challenging and interesting. Off to you, Magnus.
Thank you, Ziv, and good to be on this panel. Thank you for inviting me. Really good to be here. So I'm with Expery. My name is Magnus Almqvist. We at Expery, we are disrupting the matching engine market. We're going in with a very modern, very flexible, cloud-native, scalable, and very high-performant matching engine that meets MTF and ATS and similar regulatory requirements. And it's really exciting to be so right in time with the advent and the continuing growth of digital assets in various forms. Our matching engine is purposely built and very well interacts with and connects with those kind of markets. Our first customer is London Derivatives Exchange, and it's great to be working with Kiris and the rest of the team with the very exciting, innovative approach they have to this market.
Interesting. And Anthony, to you.
Yeah, hi Ziv. Yeah, pleasure to be with you today. So I'm the head of business development for Onera. And in the wake of COVID-19 and in the face of the economic crisis that we find ourselves in, Onera has brought together a leading group of industry participants, over 70 institutions, from banks, asset managers, leading exchanges, leading technology providers, and leaders generally in the digital security space to take the private markets online, to create a global online market for private markets which can connect assets and investors worldwide.
Anthony, can you tell us a bit about the GDF Market Digitization Committee that you're leading?
Yes, so this is all formed under GDF. GDF are a not-for-profit, global digital finance. And within that group, we've brought everybody together and we're taking a very open approach, developing with open standards, a network. It's a network we call FinP2P because it's a peer-to-peer network between institutions. And that has tremendous momentum. And at the moment, we are working towards building and bringing online that network next year that will bring together private markets across the world and really enable investors to reach assets across jurisdiction, wherever they may be.
So certainly beautiful to see large institutional and banking players interested in taking part of this committee. Graham, I'd be happy if you could start this discussion by saying a few things about what is digital securities and what are the attributes of digital securities that are so important to the market.
Sure. I guess you know, the way that we think about it, at least, is we try not to think of digital securities as a new type of asset class. Really, these are securities. So MiFID securities, equity, debt, but the main difference being that the record of ownership is housed on a blockchain. And I think with that comes a lot of benefits of efficiency that over time can be realized. So a lot of what people have kind of been doing in crypto is possible with securities in terms of, you know, faster markets, effective settlement, fast transfer of assets and potentially currency as well. But the issue that you have around it all is regulation. And, you know, if you do things the right way, as a number of my fellow panelists have, then, you know, eventually you can bring these products to market in the same way they would crypto, but under a regulated banner that over time hopefully will appear to institutions. So, you know, we're very early at the stage of this technology now. Probably a year ago when we were talking about it, you know, institutions are starting to take a look in the space, but we're starting to get some real traction now with participation from exchanges and sandboxes. We're starting to see partnerships signed up. We're starting to see credible issuances come to the market as well now. So I think it's, you know, the kind of time is now.
Yeah, definitely. I agree with you. You know, in the past months, we've experienced, the world have experienced the COVID-19 pandemic. And this talks about many countries entering a recession. What do you think that technology can bring to the market in order to ease a bit the effects of the COVID-19 pandemic? This is an open question to the panel, but happy if Marlene could take it.
Yeah, I think the spec of HEMA is a good example. It's a regular issuance, it's a regular IPO that takes place on the exchange. Only the difference to a traditional IPO is that now the whole retail public can participate in it. So we see investors taking place in this offering from the size of 10 euros until 100K up, all participating in this vehicle. And yeah, meanwhile, COVID is developing further. There are, the initial idea was that this spec would invest alongside of a larger professional investor. But you see that these professional investors, one by one, are subtracting themselves from this deal. And there is a scenario thinkable where there won't be any professional investors left willing to acquire HEMA. And then we have the retail, the community left, the stakeholders of HEMA who might acquire HEMA in that case. So I think this is a very good real life example. We don't only have HEMA, which is in trouble in the Netherlands. We have the KLM, we have multiple companies who have real issues, who intrinsically are not that badly operating companies, but due to COVID became in a troubled situation, especially while they were financed with high levels of debt, etc. So yeah.
Is there any other member of the panel who'd like to comment on that?
Well, just I think following on from Marlene's point there, I think we're obviously big supporters of DLT, but I don't necessarily think this is a DLT thing. It's about efficiencies, and to Marlene's point, investments are kind of inaccessible to a lot of people. We don't believe that everyone shouldn't have access to investments, and capital markets should be more accessible to SMEs. And Marlene's been working on it for some time as a regulated institution, but improving efficiency. So DLT is a technology that can do that, obviously, but there's others in the space like Primary Bid in the UK that are enabling retail to get more access to IPOs. And that breakdown of barriers and the use of technology, I think, has been inspired a lot by what's happened in the crypto space. But the end result is it's cheaper for issuers to come to market. It's a more well-trodden path for them to access capital, and the reduction in costs just makes it a bit more accessible to access capital markets for a lot of SMEs, which in this sort of scenario is key. Having SMEs access to capital that's not government loans, not friends and family, isn't perhaps crowdfunding platforms, but real capital markets of substantial value.
Yeah.
I think we should also add, in the context of COVID, and we find ourselves in these unique times, but it's also, I think, this year, our whole societies have gone through maybe many years of cultural adaptation to digital. Who could have imagined that we'd all be sitting here on a virtual panel? We would have been sat on a stage at a conference probably. And I think what it's opened people's eyes to is that you can embrace digital, you can work remotely. If you're talking about investors investing in assets, it's not necessarily to get on an aeroplane or participate in roadshows. So I think aside from everything that's going on with the economic crisis, the backdrop to that is it's another factor alongside how technology has developed and regulation has developed to make this possible now, and in a way in which people are willing to accept and can understand that we can do things such as take the private markets online.
I think that's a really good point to make. I think as well, people really feel a sense of wanting to get investing in the community around them, and so bringing to market projects where you can have a true capital markets investment in businesses that are on your high street that you're trying to support through this crisis. I think that's a really big push for people at the moment as well.
Yeah, and we should maybe also say, we talk about companies that need financing that may be under a level of distress through no fault of their own, the circumstances this year. But we also know that, there are many companies where actually their business has boomed, as terrible as the backdrop is, online businesses, etc. And so there's great opportunities for investors there as well. And historically, the challenge has been those investors just don't have access, whether that's institutional or retail investors. So all of these developments in the digital securities space provide the potential for that access and the distribution, because there's money out there. There are companies who need it, and it's bringing those two things together, right?
Yeah.
And I just to emphasize a little bit, I think, which is an undercurrent of what you all are saying, is that what we're witnessing is an evolution, not a revolution. And I think this is what's so exciting about being part with these new technologies, is that we enable innovation, and therefore help growth and help kind of bringing these markets out to a bigger audience. And it is amazing to see just the kind of time to market, the lower cost of entry, and the speed at which people who opt for solutions such as Xperi, and just how innovative you can be without having to spend a lot of money.
Yeah, definitely this is an opportunity to be more efficient, especially when it comes to the fundraising processes. I would like to segue, and we spoke about retail and small business, but I want to ask you now about the big players, the institutional investors. What is that this technology has to offer for them, and what do we need to bring them on board? I'll start with you, Anthony, and this is an open question to the panel.
Yes, I mean, we're focused very much in taking the private markets online. And if you look at the private markets, they basically have, it's all offline at the moment. Everything's pretty much done manually. You know, every investment round, you know, people will only see a limited number of investors. And all of those inefficiencies are expensive, right? Every deal is handcrafted. You know, every team needs a lawyer, right, Ziv? And every lawyer has a different answer to a question. All of those inefficiencies make that very expensive, and you don't have the distribution. I think there are many opportunities here, but if you can take the private markets online using digital securities, you can simplify, you can streamline. Through underlying distributed ledger technology, you can provide assurance about the information that you're distributing alongside those investment opportunities. And ultimately, it brings new business models, because it enables participants in that network to access those investments and to manage issuances at a lower cost. And potentially there's new business models about how those institutional participants can then earn income through the lifetime of those assets on such a network. So there are massive opportunities for institutional investors, and on the other side for large private companies who at the moment, you know, companies are not going public. Those large private companies have no liquidity in their stock. And some of these, taking these markets online provides an opportunity, for example, for those large private companies to make a little bit of their cap table digital, to give them a little bit of liquidity. And that provides great new opportunities for institutional investors in large private companies.
Just to continue on that point, for the institutional investors, a model which enables a much better simplification of the distribution of returns is really important to them. So the processing of the corporate actions is one of the biggest costs within the institutional side of the business. So a model which enables a better distribution of returns much more accurately will enable institutional investors to really see potential and growth there.
Milan, you're already working with the banking industry, right? I said she's not with us. Milan, are you with us? Okay. Graham, do you want to take it?
Yeah, sure. I guess you know, with the institutions, you know, there's a difference between what I used to think of institutions and what I do now. But if I think of them as the kind of large market infrastructure players and true institutional investors, it's still very early for them, especially in digital securities. So I think you know, if we just look at crypto first, because I think rightly or wrongly, people associate the two together. Crypto is becoming more and more acceptable. You know, things like PayPal adopting them. I think you know, you can easily run an argument now that it's a mainstream method of payment, and there's been a bit of a flip in the way that people think of it. They've stopped thinking of it as a kind of, you know, crazy currency to something which potentially has value, certainly seems to be some sort of store of value, is almost proven to be a portfolio diversifier, and there are ways of controlling it, and there's regulation appearing around it, as well as exchange traded products that give you exposure to it. So, you know, the whole space is becoming a little bit more acceptable, but digital securities are lagging a little bit behind. They're almost more acceptable, but they're much less developed in terms of infrastructure and players. And if you're a bank, you know, the opportunity cost of working with, you know, any one of us here on a project versus, you know, actual deployable, tangible solutions right now is probably, you know, too great for them. But most of the banks that you see have the teams in place. It appeared that each bank kind of had one or two people to say they were doing something before without actually, you know, making real strides forward. But actually now we're starting to see some good projects coming along. I think BNP announced the other day that they transferred a digital security using Curve. You know, Johannesburg Stock Exchange recently did a partnership with Globacap, you know, which is a pretty big deal in my mind. You know, you're seeing these partnerships emerge everywhere. So I think, you know, over the next 6 months or so, we'll start to see institutions pairing up, start to see projects, sandboxes being completed, and then hopefully later into 2021, we'll start to see a more widespread adoption.
Milan, hi. I want to hear about your experience, because I know that you're working with ABN AMRO and Euroclear So I wanted to hear from your experience working with the banking industry. How did they accept an exchange model?
Yeah, I think ABN AMRO is a good example where you see that ABN AMRO provided cash wallets for us to be able to settle transactions real time on the exchange, and that means that everybody who has such a cash wallet can do transactions on the exchange. I think another example where what we saw is that we were capable of financing companies or projects already, but the connection to the institutional world, it was a two-sided problem. The size was often too small, and the assets were too mostly involved new technology, new companies, so the risk profile of the assets were too large, and that's where that's why we've set up this vertical of the deep tech ventures, because combining an IPO of 30 ventures gives a size which is sort of start to be institutional ready. And by setting up a new structure, not a fund structure, but a connection to a university that sort of selects, monitors, and also monitors the performance of these deep tech ventures, gives the institutionals the peace of mind that they can invest in assets in which they've never invested before. So you kind of now create a combination of what used to be a fund, but where the underlying companies themselves are now publicly listed, and they start with an IPO and maybe end with being bought off the exchange. So, where you actually make it possible for the institutionals to participate in it, not only in equity, but also in debt. So we have Rabobank most likely financing about 20% of this issuance in venture debt, and a couple of larger institutional investors investing in the equity part, and then we offer a small part to the retail investors or the high net worth investors, depending on what Hightech Excel wants to do. So there we can create an ideal mix between institutional, retail, in an asset that in the past was only funded by full friends and families or subsidies or universities. So that's how we try to bridge that, and it's new. But the institutionals react very positively to it, so that's good.
That's very cool. I say you spoke about tokenization of that, but this is also an open question to the panel. What would be the best use cases for digital securities in coming years? For example, I've heard of a combination between DeFi and security token, where security tokens or digital securities are used as collateral on loans, could be even venture loans. That is very interesting, especially when you have a secondary market, which you can then liquidize those shares or equities collateral very fast. What's your experience with the use cases for digital securities?
I'll start actually, and the reason I feel I can do that is that I'm talking to so many different prospects and so many different startups at the moment, and it's really fascinating to see the innovations and the ideas that are spurring out there. And I'll focus on two different ones. One that I see is various structures of automating or making much more liquid deal financing and equity lending in various forms. So if you want to make a trade, but you actually need to borrow money or borrow collateral in order to finance the deal, you could make that part of the exchange ecosystem in a much more automated way, using smart contracts and DLT and a flexible, innovative matching engine. You could take that a step further and actually link the resulting trades to the supply chain, and kind of tie it into actually tracking your supplies, and then also automating supply chain management. And I think all of that will just make it so much easier to actually be on top of, you know, how do you finance supply chain management? How do you actually finance your deals? And also keeping track of your suppliers. I think that area is really exciting. The second example I wanted to bring up is sort of bond similar kind of products, where again the smart contracts allows you to build much more innovative structures. So instead of a coupon based on interest rate, you can have a return or a coupon based on results in some capacity. And I've seen that ranging from sort of preventative care measurements all the way to revenue share and so on. But it's really exciting to see what you can build into the smart contracts, and especially in the ESG space, where you then can say, okay, I want to invest my money into not only what gives me good returns, but also gives other benefits into society. So you can start measuring how much I actually get in return from how efficient a new power plant is, for example.
Yeah, what I would say is interesting in the institutional space. Oh, sorry, Graham. Yeah. So yeah, the last few years, the institutions have basically stayed on the sidelines, right, and explored blockchain technology and looked at afar at what was going on in the crypto space. And I think for a number of years, institutions felt that this was about, okay, we can adapt this technology and it can take costs out of the existing financial markets. But I think that streamlining, taking costs out of your existing financial markets is a massive lift, right? It will take many, many years. And I think it's only with the advent of digital securities, with regulation evolving, and to Graham's comments earlier, you know, the two worlds, the public world and the institutional world, are moving closer together. But fundamentally, institutions can now see the opportunities, such as the use cases Magnus talks about, which bring new clients and new revenues, right, from new markets. And I think that's what's really accelerating and driving institutional adoption there. And that you can see then multiple use cases. I mean, one reason we're very focused on the private markets is because of the low technology footprint. So it's more of a green field to build the right kind of rails, the way they should be built for the financial markets. But you can see now within a reasonable period of time, the opportunity to digitize loans, to digitize parts of private company cap tables, etc. And so these are exciting use cases because I think they're now reachable. Whereas a couple of years ago, people would say, oh yeah, this technology could impact financial services in 5 to 10 years. Now people can see that, no, this can impact us in the next year. We can see these things fully regulated, going to production, and generating new business with new clients in new markets.
I think though that still people underestimate just how complex those back office processes are that they need to be able to cope with from a digital security point of view. I think that there's a massive potential, but a huge problem to be solved to actually get digital securities settling correctly and corporate actions being managed properly. And I think underestimating that, you kind of do that at your peril. It's a really big and complex problem. And I don't really see a lot of talk, discussion, innovation in how to deal with those back office problems. There's still quite a lot of focus on the front office side of things, as always, but post-trade is kind of a second class thought.
Yeah, well, yeah. I mean, sorry, I think we came across you today. No, I mean, I've spent many years working in large financial institutions, right? And you have to be inside of an institution, in a large institution, to understand the sheer scale of operations and technology that are basically dealing with the inefficiencies and the inadequacies of what's been built over the last 30 years. And it was all built back to front because the financial services industry built the front office first, neglected the back office. It's dislocated from the front office, and you end up with this massive heap of spaghetti, right? And that was one of the primary reasons that I shifted my focus from the public markets to the private markets, where there isn't that footprint, right? And if you start in an area such as issuance of private securities or debt of private companies, it's much simpler. And I think you have to find those places where you can focus and bring stuff to production. And ultimately, when we do those things, they start to build the rails that may ultimately impact the public markets much further down the road. But certainly it's a massive issue, and it's what's weighing financial institutions down, is that billions they spend every year on that inefficient legacy technology infrastructure, right?
Yeah, absolutely.
Graham?
Yeah, I think, you know, and to be honest with you, you guys have covered a lot of what I was going to say anyway, but I think there's a big playoff here in how regulated a space is and how innovative you can be. So you mentioned DeFi, Ziv. You know, when I observe what's going on in DeFi, there's a lot of people doing some, you know, some great stuff and thinking it hasn't been thought about in a regulated financial sense. And most of the time we sit there going, well, of course we would do that. But the fact is there's these regulations exist that you should be following. And a lot of the activities that I see happening in the space, I think should be regulated, and I think at some point someone is coming after them. And I completely agree with Kiri that, you know, we can sit here and go, okay, wouldn't it be great to have, you know, every time Apple sells a handset, there's a real-time dividend paid to whoever owns it on the blockchain on a real, like we can all conceive of it, it's great. But when you get into the nitty-gritty of, okay, in order for that to happen, we need electronic currency to represent real currency. We need to make sure we account for stamp duty. We need to make sure we have an e-money license that covers multiple jurisdictions and that we've captured the beneficial owners at the point of, you know, there's a huge number of things that need to be taken into account. So, you know, we've got 11 issuances pre-signed. They're equity and debt, and you know, and again, Q is absolutely right. There's not much, you know, people just think, okay, this will pay a dividend and that's it, or this will pay a fixed coupon payment of this per year. If you get much more creative than that, you're definitely going beyond the realms of the technology right now. So, you know, in answer to your question, I think, you know, it can suit many things, but right now getting something simple, traded, demonstrably correct on chain is the most important thing for everyone to be doing.
Yeah, and that's before you even get into how the messaging technologies work and what actually is and isn't possible to send as a message in an institutional world. You know, stuff that people think of at the moment, it just isn't physically possible to do that and to cope with that in the institutional side because of legacy systems.
You know, Graham, you touch upon regulation and regulators. Be happy to know, like, what's your experience working with regulators on this innovative technology, and what role do you think the regulators should play in the future of digital securities?
Yeah, so our journey was, you know, as probably as one would expect, we went there cap in hand, you know, kind of as open as we could be. We've been regulated our whole careers, so we kind of appreciated it anyway. And I wouldn't say it was an educational journey, but, you know, just the FCA in this instance, making sure they understood how we were satisfying all the regulations with our solution all the way through. And at some points, you know, it was, you know, through the complexities, it may have been difficult to understand, but on the whole, I would consider them to be fairly supportive, but just ensuring that they weren't introducing risk into the system. I guess what surprises me, well, there's a few things that's happened later. I think the European the proposals that came out around MiCA are quite interesting in that it shows that actually the regulators' thinking is quite far advanced when they start talking about having a DLT-based CSD and the like. You know that there's some good conversations happening internally there. But on the flip side, I still look at a lot of the activity in the market and can't believe it isn't shut down more quickly. So a lot of the stablecoin activities that we see going on, a lot of what was happening in DeFi, you know, I think that they just need to move a bit faster, and not to stifle innovation, just mean to say, this is really great, this product you've launched is fantastic, but could you possibly just make sure you know everyone that's trading it and make sure you follow by these rules, and then we'll have the benefit of innovation that's actually adoptable in a much wider basis.
Marlene, was that your experience as well, launching a regulated MTF?
Well, we got our first permit already in 2016, which was really pre-blockchain, pre-ICO timeframe. And at that point in time, I think what made it feasible for us to get the permit was that we were settling real time. That takes a lot of risk out of the exchange, of course. Then in 2018, we filed for the MTF license, which is an extension of the regulated market license. And that in itself was a whole nother ball game, because at that point in time, MiFID II got introduced, and that significantly made it more complex to get our licenses, because at first all the investors were operating directly on the exchange, small or large, institutional or non-institutional. But with MiFID II, we also, to be able to allow investors on our exchange, so any investor, we had to, retail investors could only access the exchange through an investment firm or a broker, as you may call them. And there were no brokers in the market that were able to settle a transaction real time at that time. So the only solution for us was to set up a broker ourselves. And that's why we've got a package of multiple licenses at this moment. And only now you see that more and more investment firms, brokerage houses are open for changing their back office systems, their back office processes, their settlement processes to connect to an exchange such as us, to also allow their investors to trade on our exchange. So it was an adventure. Luckily, we have a very good and innovative AFM regulator in the Netherlands, but it was certainly not an easy adventure.
Thank you. I'm going to finish with the last question. I wanted you to make a prediction about this market, each one of you, and share with us one of your insights about how this market is going to evolve and hopefully help SMEs finance and help retailers have more investment opportunities that they are currently offered. Start with you, Graham.
I was hoping I'd get more time to think about that one. So, I guess, Marlene paints the picture quite well there of her journey. But, we've had similar experiences where you can be innovative, but the market acts in a certain way and it's going to take some time to catch up. So I think over my strong view is that by 2030, every security out there will be on blockchain, just because it's a more efficient technology for everyone to use. So, and I guess in the intervening period, what we're going to see is, gradual changes in pieces of market infrastructure. I think over the next 2 years, you'll start to see a digital CSD come about. That will mean that digital securities is freely transferable as crypto. So that will be exciting. I think like the project Anthony's working on, that we're very close to as well, the Onera project is an exciting project, and it's one of many of creating private market bulletin boards in the short term. And I'd say where they have an advantage over exchanges is they tend to be less regulated, but they may suffer from lower liquidity. So I think we'll see pockets of private market liquidity coming together as the regulations evolving on the exchange side, and then ultimately they'll all kind of come together in a greater global liquidity. But where this is going is increased democratization of finance, so accessibility to all investments for all types of investors, and accessibility to global capital markets for all companies.
Thank you.
If I might go next to follow that, I think that Graham's very right on a lot of points there. And I think just to add to that, I see that there'll be a greater and quicker revolution on the retail side of the business than the institutional. So I think over the next 2 to 5 years, there'll be much greater involvement, especially in the UK, from the retail side of the world, and the institutional will struggle to catch up with digital securities, and mostly, as Graham has said, around regulation.
Anthony.
Yeah, picking up maybe from the institutional perspective. Firstly, I'd agree with that inevitability that all securities will go digital. I think the SEC said the same a few weeks ago, which was great to hear. Yeah, but that will take time. But we're on a curve. We're on an accelerating curve. And I think, nearer term, what's changed is that the regulated financial institutions are now really engaged. They've been following this space intellectually for a few years, but not really going there, concerned about regulation, etc. That's what's changed. And so I think we're at a tipping point now where regulated institutions are coming to this space. They can see new business opportunities. And in many ways, it's like looking at the minute hand of a clock. If you look at it, it doesn't move. If you step away and look back, it moves, right? And I think that's what you'll find. You'll think, oh, in 3 months' time, not much has happened. But if you turn around in 2 years' time, you'll see that movement, and we'll be on an accelerating trajectory.
Magnus?
Yeah, I think it's back to exactly that point that Anthony is making very well, is that this is an evolution, and it is happening. All assets will eventually be digital, just because it makes sense. It's more efficient. It grants you much more flexibility, and the barrier to entry for innovative new firms are much lower. Yeah, it's an exciting space.
Thank you, Milan.
Yeah, I think I'm mostly excited about the fact that I think within a few years from now, we are capable of buying and selling our assets over multiple exchanges. Being able, if there's liquidity on one exchange, you just move to that exchange and you can do that real time instead of needing to call your Clear, your CSD to move your assets to another exchange and all that kind of stuff. It will then all be in a split second. So I'm really excited about that. I can't wait till that happens because I think that will open up a lot of opportunities. And yeah, I think from that point on, it's the most important fact will be the know your asset part, where we connect the actual information of the asset to the security. And that's where the DLT and the whole tokenization really creates a huge added advantage because we won't need to onboard all these assets by separate exchanges. All the information just can go alongside with the assets. So very excited about what is coming up. Yeah, absolutely.
Very cool, very cool. I must say, I'm talking to many people in this space. I've heard of, I believe that we still don't grasp completely what revolution this digitization is going to cause, because every day I hear of new digital ETF and what can you do with it, and other schemes and other ideas about using digital securities. So I believe like the future is very interesting, and we'll see a lot of creative ideas about digital securities. I want to thank each one of you who came to this panel and shared your ideas and experience. I know that you are personally very busy, so I appreciate it very much. And thank you very much. And I'll see you in the next panel.
Okay,
Thanks, everyone.
thank you very much for having us.
Thank you.
Bye.